New show of Market Makers. I've got a special guest for you on this edition of Market Makers, which is Raamdeo Agarwal, Joint Managing Director of Motilal Oswal Financial Services. Raamdeo, for a delight to have you back. Thank you for joining us. If I just map how Indian markets have moved this year from 5950 on the Nifty to 6500, Indian markets surely have managed to climb all the wall of worry. Bears are insisting, don't ignore China, don't ignore tapering. Ukraine is a big problem, but markets are charting their own course.
Yeah. So it has been quite a journey, particularly when the year started. There were a lot of these concerns, global macro concerns, local macro concerns, and I think the real winner is the corporate India. I mean, they have held on to the earnings very well. And I think the currency reforms which happened in the early part of the year, where Rupee, which was grossly overvalued vis-a-vis global currencies, that, I mean, of course it was a bit unsettling, but eventually it got settled at about 62. And we got one of the most brilliant central banker, and he kind of, again, gave some kind of stability to the currency. And then, because of that stable currency at 62 or 61 or something, now we are seeing the currency translation benefits in our export-oriented companies, businesses like pharma or tech, and even non-export-oriented, some of the very strong franchises from India. I think those companies have also held on to the earnings very well. So all in all, we saw about 10% kind of earnings growth in the current year. But more importantly, what is actually driving the market, apart from the short-term political speculation, is the outlook for the next year's earnings. Next year, they're saying from 1300 rupees EPS for Sensex in the current year, we are looking at 1525. 1525. Of course, it gets moderated little bit, but 1500 next year, so you're talking about 13 to 15% kind of growth. I think with that kind of scenario, market is not going to go below, current levels of 15, 16 P multiple.
So are you bullish on markets irrespective of the election outcome? Do you think we have a macro bottom in place? Do you think earnings have bottomed out? Is that the reason why you're bullish?
Yeah, I'm bullish more because of the earnings rather than election. Election is just a short-term phenomenon, and I also like to see a stable and change of the government or whatever. But basically, the corporate earnings are because say even if a desired government comes with a huge majority, what do you buy? You again go back to the figuring out which company is going to do well, which company is earning, which has a good franchise, which has a, which is earning above cost of capital, which has 20-25% ROE. So when you go back to the corporates, what you're talking about is the corporate earnings outlook for the next year. And that's from where we started. The corporate earnings outlook is very robust for next 12 months, irrespective of the change in the government. Can the change in the government, can it become amplifier to the earnings, maybe not in 14-15, but 15-16 and later on. I think the decisions which will be taken in this year, next 12 months by the new government will have a huge impact in the earnings outlook for the following years.
So at 6500, where are you table thumping bull?
Probability is very, very high that in next 5 years, you will see index itself, forget about the individual stocks, index itself going to say 12,000, 13,000 levels of Nifty in next 5 years. That is very, very possible.
Why are cyclicals making a comeback? Do you think names like L&T, Crompton, Greaves, Thamax, have they generally turned around, or the current price appreciation in some of these cyclicals or industrial names is just a deep swell? It's a hope rally which pretty much will fade away.
It may turn out to be some kind of a hope rally, you are saying. But interest rates are now kind of bottoming out. I mean, they tried it 12 months back before new governor came, and then he said, no, I don't want to look at WPI, we want to benchmark with CPI. So now CPI is also coming within their targets. I mean, it's still a little above 8%, but once it comes below 8% or comes to 7% or something like that in next 4-5 weeks, I think we are going to see some monetary policy response to the current leg of tightening which we have seen. Then we are going to have new fiscal guy, new finance minister, how he wants to behave. So both together, will it be very restrictive for a very long time? Or then we are also seeing some softening of the commodity prices. Iron ore prices have gone to all-time low of about 105, 106. Oil is looking to be somewhat softer. So energy prices are looking a little, more attractive. So if these things come together, we might, events must come together to make a sizable bull market. I mean, You can have doubler in 5 years. You can have 5 times in 5 years or 3 times in 5 years, depending on, what all happens around. I mean, if by chance oil were to go to, say, $75 or $80.
Do you think it could go there?
No. There is always a probability. 10% probability is always there that it can slump. There is no reason why so much of oil, there is so much of conservation is on. Efficiency, fuel efficiency and all are increasing. There is a good possibility that oil can come down. And that can change the complete complexion of how the external front looks for India and how inflation will shape up, because the energy prices are going into all the prices. So that there you can see some relief. So a lot of things can change. What I'm saying is that current earnings which is there for the corporates, that very well supports at current interest rate environment the current valuations. At 15-16 times, on the whole, you are very, very reasonably priced. So your likelihood, the probability of an investor losing serious money is not there. Maybe 7-8%. And if you can't lose 10%, don't come to the equity markets.
So the downside could be 10%, but the upside in next 3 years, to your mind, could be much more than 10%.
Yeah, so there is a 10% to lose always, and there is 100% to gain. So the bets are in favor of buying.
Give me a name where you're confident of a 20% CAGR growth, earnings growth for next 5 years.
See, like private sector banks, say HDFC Bank or HDFC Limited itself, or for that matter, most of the auto companies. Once the say Maruti or Hero or Bajaj or some of the NBFCs, housing finance companies, all the housing finance companies. Growing at 20% for most of these specialized NBFCs is going to be very easy. And then you get early rise, the stocks which are coming into being now, the emergence category. They have been trying to become successful for last 5-10 years, and then they find that critical mass or critical size, and they get into making 15-20% ROE, and so the whole horizon is open. So those kind of completely new stocks, and you keep hearing every day about them.
I want to hear some from you.
No, so like one of the successful picks we have in last 12 months was say Gujarat Pipavav. So we, at 45-50 we looked at it. Now it is 85 and all. So those kind of stocks can definitely, the earnings can grow. Now whether the stocks will grow or not, how much is already their price, that is a matter of judgment. But you will see, what happens is this emergence happens for too many companies, like even Motilal Oswal Securities itself. We started in 86-87, till 1990 we were struggling. We didn't know whether we exist or not. Then this 92 boom happened, Harshad Mehta boom happened. And by the time the boom got over, we had a few $1 million of our portfolio. So what happens is that a lot of companies which are in the formation stage, or those who are struggling with their business models and all, the moment good policies come, good governments come, and bull run starts in the economy, forget about the market. Market will reflect what happens in the economy. There won't be a bull market, real bull market, big bull market, unless there is a bull market in the economy. And that's what political change is very important, because political change actually starts a new wave of economic changes, and ultimately even 2003 started with the change of the government. Initially we were very pessimistic, but eventually it was the biggest bull market. So I think economic revolution or change, dramatic change in the economic activity in the country, which has come down to more like 4%. If it goes back to 7-8%, I think we are going to have a terrific time.
Those who've only bought quality stocks, for those who bought exporters, IT, pharma, last 3 years have been quite kind and they've been quite rewarding. Is it time to change the template?
No. See, one thing, because whatever you buy under quality, whether you buy first thing is what you understand. But never bring non-quality home if you are an investor.
Even though it's cheap?
No. See, at very cheap price, anything can be invested. But for an amateur, buying quality is very important, because at the end of it, you will be stuck with what you buy. You cannot keep practicing low quality, cheap prices, and eventually when the tide turns down, you cannot have blue chips in your portfolio. Never will it happen. आप जिसे खिलोगे वही घर में रहेगा. So if you want a quality portfolio at the end of 5 years or 10 years, you better make sure that every single piece you buy in your portfolio is quality. I have suffered enough for 35 years buying low quality very cheap. You have to buy quality cheap.
So is PSU Bank a cross now?
Yeah, so now PSU Bank is definitely not quality. See, tomorrow there can be some dramatic shift in the policy that say they want to put the whole thing on the block. Instead of giving new licenses, say 25, except for SBI, everything else is on the block. Come on, anybody who can come and kind of take it and provide that good management, or they can club together, make 5-6 banks and change the management and all. So those kind of dramatic shift in the policies, that can change, fundamentally changing the way you manage the banks. If that were to happen, clearly at the current price it is a throwaway, absolutely. But if the construct remains same, then clearly it's not a investable stuff.
So for an investor who's ultimately looking at returns and stock appreciation, buying State Bank of India at 1700 or buying HDFC Bank at 700, on a 3-year basis, which stock will give a better return?
Better return is a function of a lot of cycles and all, because right now all these banks are very depressed because of the adverse credit cycle. Okay, so SBI can surprise you in terms of it can triple also in 3 years if everything works out well. That's the kind of potential. Downside is 200, but upside can be 2,000 or 3,000 rupees. So you cannot compare in that short scale. But if you ask about 10 years out, and I would bet on HDFC Bank at 700.
Are you happy to own Nestle even though it's at a P multiple of 40?
Yeah. So clearly, see, I didn't buy at 40 P multiple or 45 P multiple, but I'm very happy holding it. I know it is challenging time right now. Growth is slowed down. So clearly, what return we have got, excessive return we have got in last 5 years, clearly it is going to be moderated in next 2 years. If I've got 25%, that will come down to 21, 22%, which is the long term what I expect. So after a return holiday of 1 year, hopefully the growth will resume and we'll start making money.
Your thesis on Hero MotoCorp is finally working. You were patient, you were able to analyze the competition. Honda is there, but it has not dented into Hero MotoCorp's market share. Do you think the beginning of good times for Hero MotoCorp has just started? Their market share is strong, their presence in export is not there, and they're looking at margin expansion.
Yeah, so I think worst seems to be clearly over it looks. They have fought the 2 years of transition. And they have seen the onslaught of Honda in terms of scooter build-up, where they have also participated. Motorcycle market share has not been dented, which was the biggest fear we had at that point of time. But success in the export market is still very limited. It's early days, and really launching a new product in India and making it big is also to be seen. But these are all happening at a time when the local markets are not growing. So hopefully, after 1 or 2 years, particularly this year's stagnation broadly for the industry, I think next year and next 3 years, if the industry grows at about 12 to 15%, which has been the last long-term growth rates, I think we'll see Hero coming of age. And by that time, in this June, their royalty payment will be over. And they're also talking about, on top of it, margin expansion. So I think a margin expansion with a volume expansion, I think and the very reasonable P multiples, I think you will have a good time.
Now, because of sheer pressure, the Suzuki management has relented on the Gujarat plant. But somewhere, as a minority shareholder, are you slightly disappointed with the way management has conducted themselves in the last 3-4 years? First it was the royalty issue, then the Gujarat plant issue. God knows what could happen in the next 3 years. They could come out with some more, bombshell, so to speak.
Yeah, so I don't know. I still can't understand what they're trying to do. Even in this issue, it's very confusing. I still can't see what they're up to. Why exactly it is important to have in 100% sub this plant and not have it in Maruti itself. What is the difference between Maruti Suzuki and Suzuki itself? Why there are talks of two entities? They own, I think they own about 60%, isn't it?
Yeah. So about 54, 55.
Yeah, whatever. So why should there be talk about this plant being there, this plant being here? And so I'm very confused. But the franchise is invincible in the sense that they have 45% of the Indian market. Entry level, nobody can match their the quality and the price at which they can give, the way they can service the cars, the price at which they can service the car, and the installed base which they have, the satisfied customer list they have. That is very important.
Not lost market share at all.
Yeah, so there is nothing. Maybe Hyundai is one competitor. So it's a duopoly kind of thing. Very very distant second player. And penetration is literally nothing in India. I mean, I think number of cars owned by Indians are pathetic. I mean, I think China sells about 18 million cars. We sell about 2 million cars. So I think the journey next 10 years is going to be huge for Indian first-time car buyers. And here is 50% kind of, it's a, not monopoly, it's a very strong dominant position. So opportunity is very large. I don't know, this kind of small thing. I think their payout ratio also is very challenging. I mean, with so much of cash, their payout is in single digits. So now with this cash being free, I'm sure they'll take care of the minority shareholders. I think they have taken care of the company very well. They have not taken care of the minority shareholders well. From here onwards, I hope they'll be far more careful about handling minority shareholders' interests.
Do you think the market opportunity in India is better or bigger for two-wheelers or four-wheelers?
See, if you look at the competitive structure, then it is much healthier on the two-wheeler side, because you have this 4 players, starting with Hero, which has more than 40%. Then you have Bajaj, which is about 20% or so. Then you have Honda, TVS. So these 4 guys, they have about 90%, 95% market share. So this is very, very healthy. Whereas in car side, you have, I mean, I don't know how many players, 13, 14 players, and even now new ones are coming, and everybody is launching so many new products. So I think competitive intensity in the car side is far bigger. Second is that ticket size of a product also decides your cyclicality. So you have 50,000 rupees the average price of a two-wheeler. That becomes like almost not an FMCG, but low value kind of durable. You know, the durability of two-wheeler and four-wheeler is same. Whereas this one doesn't require bank support so much, two-wheeler, to buy. Most of it is bought with the cash. Whereas for car, 90% is bought with the help of bank loans. So the cost of credit there is also a determinant factor. And you can always defer the purchase of a car. It's a luxury, it's a discretionary, whereas it is more of an essential. So I think that's why the return ratios of two-wheeler company is significantly higher. There is only one company which makes money in car, that is Maruti.
Others are losing money.
Everybody else is losing money. Here, even the 4th player makes money.
So true. Let's talk about IT. Now, IT sector in last 2 years has enjoyed a big tailwind, which is the currency tailwind. For the first time, the tailwind could become headwind. What do you make of the current setup for IT? Up until now, there were 2 propellers for IT, US economy and the currency tailwind. Looks like one tailwind is getting challenged. Can IT stocks do well in an environment where rupee is set to appreciate?
Yeah, I mean, if 62 goes to 58, I don't think world has come to an end. I mean, they have in any case not realized more than 58 or so. So, temporarily if something has gone to 62 or 63, see, Indian inflation differential is pretty high compared to the world, particularly America. Our current account deficit is not in very healthy condition. I mean, for last 2-3 months we are seeing some correction, but still the gold policy is not clear. And when the economy picks up, the import intensity of the growth is also going to be high. So how do we handle our current account deficit by trade itself? I mean, capital flows you can get, but how do you handle the actual export competitiveness? So those are going to be issues. So we are still stuck with a very weak currency. Unfortunately, for last 10 years, we didn't do that change. You know, from 2003 to 2012, we had massive inflation, yet our currency remained at 42, 43. And that was one of the things which was painful for IT. That has been reformed. That's why I talked about currency reform. So now it's around 60, 58 or 62, whatever. I think having seen this accident of last 12 months, I'm quite sure, irrespective of who's the leader, the RBI will never risk overvalued currency.
So what are your thoughts on currency? You're not very bullish on Indian rupee, you're not very bearish on Indian rupee. You expect rupee to remain range bound. So, but what happens to IT?
Yeah, so IT does well because India has absolute advantage in IT. World is becoming more and more digital.
So you don't think IT is a crowded trade?
No, definitely not. It is one of the best trade, and I think the best of IT is ahead. Because it took 15 years for Indian IT to become $100 billion. Now it will take only 5 years to go from 100 billion to 200 billion.
But the market capitalization of TCS is well over $60 billion. Is there scope for that market cap to move up?
Yeah, why not $250 billion or something like that? Because...
You believe it could happen?
It could happen because the kind of... See, the size of the opportunity is global. Yeah. There are very few industries where India has a real sizable global opportunity. And you have an advantage which is unassailable. You get a basic guy at less than $10,000 here. And the same guy will cost you $80,000 to $90,000. So that is the first level of your advantage. Then that's the cost. Then the scale. If you want 5,000 guys on a particular skill, you cannot get anywhere. Only in India. Then the scale. Cost, scale, skill and complexity. Everything India is moving in. You know, I mean, we started with only coding, but today I think we are managing far more complex kind of projects, and now even the entire end-to-end cycle, you know, product can be done in India. So I think Indians will keep making progress, and starting with a kind of a cost becomes the first starting advantage, but at the end of it, now it will be the value delivered to the client. So I think it remains an unchallenged industry worldwide, and digital economy is becoming bigger and bigger.
But your favorite pick is Infosys.
Yeah, I mean now they're all the five sisters, I would call it, you know, starting with TechM to SLT to Infosys, TCS, Wipro also. So you can, wherever your understanding is better and you think that growth price differential is higher, I think that's where I bought Infosys for a very long time. But TCS is not to be, I mean, though it is largest, but they have the best growth momentum right
But
now.
your last big purchase was Tech Mahindra. That's what you told us. You're happy to own it for next 5 years?
Yeah, sure.
You know, every time Raamdeo Agarwal comes on TV, he's expected to speak about stocks. He's expected to make a big comment. So what is your big call for 2014?
See, 2014 is, the markets are going to be, I mean, irrespective of the election results, we are not going to see more than 10% decline on 12 months basis. I think the corporate earnings have, kind of taken a momentum, and it is the time that all the fearful guys are staying away from the market. They must put their money in, because I think the big rally which is going to come or has started coming is going to become much bigger in the years to come.
So like your caption says, buy right, sit tight. That time is not over.
Yeah. So I think this is a perfect time to just buy and sit tight. But buying right is very important. If you buy wrong, then you can't afford to sit tight. So if you want to be a guy who is not so much active in the market, but who is an investor, high quality investor, you have to buy right and sit tight.
And this is a good time to buy.
This is a good time to buy.
Good to have you on the show, sir. Thank you, sir, so very much for joining us.
Thank you.